Good afternoon, everyone, and welcome to Stock Market Today for Friday, March 7th. It's Alissa Coram here. Now, even though we had some upside reversals to cap off the week, the major indexes are in a very vulnerable position. And joining me now to provide an inside look at the current market action and some stocks to watch is my colleague, Mike Webster. Mike, what are we going to be chatting about today?
Oh, a lot. But bottom line, we're at a new day one. And so we're going to be looking for a potential follow through if today's low holds. And we'll just get into all things follow through day and beyond.
Sounds like a plan. Okay, well, let's first start off with a high level look at the major indexes. The NASDAQ on Friday reversing higher, up 0.7%. Intraday undercutting not only that Tuesday low, but also the 18,000 level. Meanwhile, the S&P 500, if I can type it correctly, finished Friday up about 0.6%, hanging on by a thread to that 200-day line. It's like that little cat meme, hang in there. We're trying to hang in there. But the weekly action definitely provides that added perspective. Heavy losses for the week across the board for the S&P down over 3%, the Nasdaq down almost 3.5% for the week, even with Friday's upside reversal. The Dow also down solidly for the week, finding support at the 40-week line, reversing higher on Friday, up about 0.5%. So maybe a little relief on Friday, but not a whole lot. We still want to see a lot of upside progress, more proof that we can actually turn the tide here, Webby. Small caps finishing the day up 0.4%. So perhaps the market cheering. Some comments from Powell, even though he didn't say a whole lot new. We don't need to go down that rabbit hole. But at any rate, whatever the catalyst was on the macro front, we've sort of seen this before. We've had several upside reversals over the last week and a half, but it's still a major downward trend here over the last couple of weeks.
Yeah. So what we're seeing here, and it's really clear on the Nasdaq, is the volatility that you'll see during the beginnings of bear markets or intermediate corrections. Right now, we're in an intermediate correction. You don't never know if you're in a bear until you're in a bear, and that's typically thought of as 20% off your peak, and we're around half of that right now. But look at these days. You get a big up day, off the 200 day, then a big outside down day, and then another weekday, and then a big up day, then a big down day, then an upside reversal. Everyone's always, tries to point to what the news is when things turn. And frankly, we won't go down the rabbit hole, but I listened to what Powell had to say twice today and listen to the full playback. I didn't notice anything different from what he said. And so I think it was just more about the SPY being around the 200 day. That is why we firmed up because the 200 day is such a key level. And we've talked about this in the past that, while we focus on the NASDAQ, the rest of the world and all portfolio managers focus on the S&P 500, and a 200 day on an average is important. 200 day on the key average is the most important place. So it's good that they didn't let this one go and close underneath the 200 days. So that's a little bit of a positive sign. But what's really different between today and 2 days ago? Not much, right? You get this relatively big spread closing at the highs. I mean, the difference between two days ago is it wasn't an upside reversal because this one actually shook out below yesterday's low and by a fair amount. And that is a nice looking upside reversal. I would just be taking it more seriously if, let's go over to the Nasdaq, if we didn't have the Nasdaq's upside reversal that we had at the 200 day fail so miserably. A week ago, we had a nice upside reversal right at the 200 day. It was like picture perfect. Is exactly what you wanted to see. And from there, we should have at least bounced up to the 21 day at minimum, even if we were going to roll. But then we had that outside day the very next day, which was telling you that there was a lot more selling. Because think about it, if you're a big fund manager with hundreds of thousands and millions of shares of stock that you want to sell, right? Even though you can't go to cash, you want to sell your high flyers, high valuation stocks to kind of move into some slow and pokey things with less volatility. You would have thought that you had a couple days to do that, so you would have been like light on the selling, but instead they came out there like, okay, this is my chance to sell, and they sold heavy on, I guess that was Monday, with that outside day. So that's a very negative sign for the market. And let's look at the FFTY, which is not a perfect way of looking at our style because it's just for all sorts of reasons, but it is this is kind of like if you're trading the IBD methodology, this is probably what you've been seeing with stocks that you were either in or hopefully still not in, that have just come straight down for a couple weeks. It's been brutal. Like that's ugly, right, Allie?
Oh, yeah.
Yeah.
Very
So
ugly.
let's go to one other thing, the RSP, which is always a nice way of just kind of looking at things is the equal weight. It's not, you can't easily manipulate this, whereas you can with the S&P because it's market cap based. But since this is equal weighted, that was nice, that we were able to close above yesterday's high, although that wasn't its true high because you have that gap down there. But that was constructive, a 0.94 on your average stock getting support in and around your 200-day is good. So I don't want to be all doom and gloom, but the reality is this is just day one. And all day one means is you start counting, waiting for your follow through day. In a system that Bill O'Neill, the founder of IBD, came up with before both of us were born long ago, that was rather than trying to buy on day one, you buy on the confirmation of day one, which happens on the fourth day or after. It can happen on the 10th day, the 15th day, the 28th day, but just not before the fourth day. Because the concept is you hit a low, you try to rally, and this is a good rally, and then you have some time element for things to either wiggle and wobble around, back and fill, and then thrust higher. Another big up day, a percent or more, essentially these days. But the whole time you have to stay above the low, and today's
Mhm.
low is that low. Whether you're looking at the S&P,
Right.
the RSP, the Nasdaq, what have you. So the next week is very critical. So we can go back to SPY, and this is the one I would focus on because this had been the leader recently, and this is the one that everyone looks at, and this is the one that's trying to make a stand at the 200-day. So I would wait for this, and so today's day one, day four would be Wednesday or after, and so we'll be looking for that. And I think next week, I think there's like the jolts, uh, CPI, PPI, and I think something else that's coming out next week. So there's lots of catalysts. Plus, we have all the news out of DC that happens on a daily basis that could be a catalyst for us to move higher. So we want to keep an open mind, but the reality is there's been a lot of damage done, and typically you need time. The time that heals the market.
Absolutely. Okay, we'll have to see if we can get that confirmation of a change in trend sometime next week. But until then, we'll be in a pretty defensive mode here until we see some more evidence of stocks starting to turn the corner here. Um, all right, let's move on and let's take a look at some ETFs just to get a sense of what was going on underneath the surface. We'll sort it by what was down the most in Webby. Just chime in if you would like. Bitcoin, a lot of volatility this week. We know there have been headlines out of the White House about the crypto reserve, and it seems like this is still a proxy for your risk on mentality out there, but at the same time, you do have that cross current of the political landscape as well. Seeing that relative strength overall weakening, I would say. Let's take a look at travel continuing to bleed lower here after being an area of strength from last summer into January, but now headed the wrong direction. We looked at FFTY, XLF, the financials. This was an area that broke this week, right? It was looking great until about Tuesday. The relative strength isn't totally damaged here, but we definitely saw a shift here in the financial sector weakening this week. XLY, this is consumer discretionary. We have Tesla and Amazon in here, a weak area as well. Will we get some sort of bounce now that we've seen a lot of selling? We won't predict, but we'll just have to react if we see that. But this is an area that has weakened as money moves from discretionary into staples, which we'll look at shortly. Tech and software, this is also an area that has weakened over the last couple of weeks. Healthcare, seeing relative strength here as this is a defensive growth type area. The FANG stocks, also an area of weakness in recent weeks. Gold continuing to show relative strength as this is a flight to safety area. Insurance stocks continuing to show relative strength even with a pullback this week.
That's probably the
China,
best looking one out there is the insurance.
yeah, yeah. So we'll keep it, which isn't a great sign for growth investors, right? If this is
No, not at all.
the
Not at
good
all.
looking area. China, an area of strength this week that ramped up even more. Wednesday, a very notable move on Wednesday for the likes of K-Web here. The problem is, it seems like you do have some volatility, maybe a little extra risk here, and a lot of the stocks in this theme are extended or maybe just need more time to develop, potentially, depending on how you're playing it, depending on how aggressive you want to be, but just something to keep in mind there. Let's go to VXF. This is the Vanguard extended market. This is looking at small and mid caps. As we know, that's been a weak area of the market, continues to weaken. XLB, this is materials, showing relative strength, but doesn't look like maybe it's at the top of the list for watch list ideas, but maybe the screens would show otherwise. Webby, biotechs still look weak. Here's the staples, as I was referring to earlier, continuing to see that relative strength, just further evidence of the defensive mindset out there in the market. Same with real estate, similar to insurance, pulling back this week, but that relative strength hanging in there nicely. ARKK, this is that speculative growth area, also an upside reversal on Friday, but a major turn lower off highs in recent weeks. And this is one of the areas that was starting to crack before the major indexes did. One of the warning signs for us as growth traders. Utilities turning lower. This has that exposure to those AI utility stocks. So it looks like a lot of them broke on DeepSeek, weak rally, then rolled over. So looking weak there. Here's communication services. This also has mega cap tech exposure. I would say overall hanging in there pretty well. So we'll have to see. Maybe, if we do get a turn next week, potentially some ideas in this area. And QQQE, this is the equal weighted NASDAQ 100. Uh, Holding up okay in terms of relative strength, but not really an area where I'm looking at broadly. I think this is really where the screening is going to come in handy over the weekend to see what is holding up. Then we've got EFA. This is the Europe, Australia, Asia, and Far East ETF. So basically everything ex US and Canada. Looked that one up since we were going to talk about it.
I
And
don't think
so
China's
this,
in that one. I think it's got the other. I
yeah,
don't think China's in there, but like Japan, I think is his biggest weighting. Really
yeah, maybe
international.
that's the FE, the Far East.
Oh, okay. The with things, what I would suggest people do is screen this weekend for international stocks, but also really for international ETFs. This is just one that we put in there. There's a ton of them, and lots of them are roughly the same. But let's just go out to the weekly just for 1 second. This is where it seems like money is flowing into out of our market and out of crypto and stuff and into the foreign markets for now. That can change on a dime, but if you're looking for where to the pond to fish in, it feels like it's international. China might be a little bit too aggressive for most traders,
Yeah.
unless you're a very active swing trader. But Europe and some of the other places, um, where to look.
Yeah, money definitely flowing there. Retail continuing to weaken as we're starting to see some cracks in the consumer. Here's industrials. I would say some notable relative strength this week. We'll have to see what the screens are turning up there. XLK technology. I think it speaks for itself. We've been talking about it a lot, how this has been a weakening area. SPHD, this ETF is looking at low volatility and high dividend. You pointed this out, I believe it was last week, if not the week before, as an area that makes sense, right? The low volatility names, getting some higher yield, money flowing here as the market gets more defensive.
Yeah, the only risk there is if or when the market
Right.
turns, that's likely to roll over. But if this is an extended bear, and you have to be invested, that's where I'd be looking besides international, which is sad.
Okay, XLE, energy. This is not looking too great here in my view. We haven't talked about a lot of energy stocks as of late. Let's take a look at utilities. So this is a little bit different than the Utes ETF, seeing some relative strength here. Utilities, a very traditionally defensive area. And last but not least, chips still looking very weak here. We did have Broadcom earnings, but there has been a notable change in tone in the chip sector in recent weeks with between DeepSeek, Nvidia earnings, and a number of other stocks in that sector weakening. Webby, any final thoughts on the sector action?
You did a great job.
Okay,
We can
cool.
move on.
Only because I know we need to breeze
Yeah.
through this because you have a lot to talk about with your charts. Let's check out a couple of individual names coming up on our screens just in terms of what's looking good, not maybe necessarily to buy. Some of them, perhaps, like you said, if you're a swing trader, if you're managing risk, if you want to play, these are some potential watch list names, but it's also good just to get a sense of, as we've been saying, what is showing strength, and that sort of gives you a sense of the vibe out there, the tone of the market being defensive. That's mostly what we're seeing. But also, if we do get a turn, looking at what is continuing to show that relative strength. One area, CVCO, this is Cavco Industries, a very sexy group here. This is the mobile home area. They manufacture single and multi sectional manufactured homes. RS line blue dot here.
Yeah, I can't remember which stock it was, but back in the 70s that we had at least one, if not a couple, of in this group in that were model book stocks that had really big moves. So right now, obviously, the normal housing market type stocks, like you can just pull up XHB to give a feel for that. Like that's been
Hmm.
terrible, right? So this is showing you that the one area of strength, and that's your normal home builder. And going back to this one, this is acting so different because it's in a different space. It's in the low end homes. I was playing on their website earlier today. I was like, wow, they've got like some 3,000 square foot homes and stuff, and things that look nice for not what you would have thought with a mobile homes. So it's probably worth really investigating this area, really because the chart,
Yeah.
not because of the story, but because the chart, this is help holding up in a classic cup with handle RS line, at new highs. Even though the earnings and sales haven't been there, you're seeing an acceleration. So it's a turnaround type of play,
Hmm.
not a growth. So we trade turnarounds as well as growth stocks. So
Yeah.
this is not a growth. So it's got some issues there, but I really like this
Hmm.
setup. And let's go to the daily on this one. And this feels disconnected with the market. And that's what you're looking for right now. Really cash is what I'm in cash. Like I've got no exposure. Right now, I was trading some China stuff and some gold stuff this week, but I just wanted to go to cash for the weekend and and
That
just
says a lot. That says a
yeah,
lot. If Webby's
yeah.
in cash,
Well,
says a
maybe
lot.
that's a contrary thing, and we rip up on Monday.
Well,
But you know,
yeah,
I'll buy. That's fine.
exactly.
But
You're nimble.
really, we won't have the follow through
Mhm.
day until Wednesday. So we're in this no man's land. But this is the type of stuff that is very interesting to me because it could move regardless
Yeah.
of what the market does. And what's nice about it is that move up on earnings was moved up a bit further, stopped exactly where it should, and we had this shakeout this week. And like, this is a really good looking chart. It's
Hmm.
just not the most dynamic or liquid name. That's the
Right.
problem. It's really liquidity. So the highs from yesterday would be where I would be looking, all things being equal. Let's say the market's not falling apart. Yeah, going above that is where I would take a
Hmm.
shot, and then I would use today's low as your exit. But more than anything, I'm just going to be watching it. And what I
Yeah.
like to do is watch breakouts, see if they hold and work, and
Hmm.
then I'll just keep a list of those. And then if breakouts are working, then I'll be like, okay, the market's fine. Like, let's pull up. What was one that fell apart this week? LRN is one that comes to mind. You see things like that happen, or pull up Way. I think that got hit hard. I mean, you can look all over the place. What you want to see is not these types of actions. You want to see like the one we were just looking at break out and move, even if you're not in it, as a sign for the health of
Right.
the market. But we can move to the next
Yeah,
stock.
absolutely. Well, I was just quickly going to say, and then we can move on. Uh, I think looking at that most recent earnings report is a great idea given the acceleration, because given your description of what they do, I almost wonder if for the North Carolina
Mm,
hurricane and flooding disaster, I can't see this so much being applicable in California given the real estate limitations. But if you own a lot of land in Western North Carolina, instead of waiting forever and ever and ever for your home to be built, because I know this, my parents experienced a hurricane in Houston, took forever to get a contractor, the materials, all that. This was before COVID, so it had nothing to do with that. So I could see, I wonder if that has something to do with this,
that's
but that's speculation.
So that's a really good point that you bring up, is this is the time to do that extra research. Just go and listen to the conference call. You can multitask it, and just listen to it. What folks should focus on. If you've never listened to a conference call, you just go on the company's website, then look for
Hmm.
their investor relations, or go on YouTube and search it. But listen for the question and answer. All the canned stuff beforehand, you can almost fast forward through it. They always only say good things. They never tell you,
Yeah.
"Oh, we're really in trouble." Like, they try to make it look as good as
Yeah.
possible.
But
But
they can provide some color,
all
right?
yeah, all the
In the
good stuff
Q&A.
comes out in the
Yeah.
Q&A,
Yeah.
so
Good stuff. Okay, well, gold does remain an area of strength, so let's check in on Agnico Eagle Mines AEM, shaping up just shy of that 100 price level.
yeah, so I like just trading GDX for this space, but since we always do individual stocks in this segment, we went with the AEM because it was probably the best looking one, or one of the best looking ones in this group. But if I'm trading the miners, I like doing the GDX, because then if you get individual negative news on the stock that you're in. Typically, in this space, it ends up happening where the large company acquires a smaller one, and then it goes down on the acquisition. So I just say, I'll just go with the ETF. But this is one area that's holding up, and I like that shakeout that we had about a week ago, and it's still holding up and not gyrating as much, while everything else is. And at the same time, your RS line is inching up. So I think the better
Mhm.
risk reward is just being in cash or being
Yeah.
very, very light. But if you're just dying to put on some positions, I would look in this space.
Okay, let's take a look at Visa. I'd imagine the ATR here, the average true range, the average movement is on the lower side, the calmer side. We can take a look at the exact number, but a gentle, relatively speaking, pullback here to that 50-day line. This is a stock that's been in an uptrend and showing relative strength for a number of months, Webby.
Yeah. So what you want to do with something like this is where some stock picking skills will come into play. Is look at this one. Let's go back to the daily.
Hmm.
And now have this one in your mind. Now pull up its direct competitor, MasterCard, and look how different that one looks. So much weaker. And then let pull up American Express, AXP.
Even weaker, I think.
Yeah, a
Yeah.
lot weaker, right? So
Mhm.
then you want to go in, and if you want to play with Visa, this is where you would really go in and see why. Is it, you just be open-minded and look at the why. But the reality is the chart is telling you what you need to know. This held the 50, the other ones, you know, couldn't or weren't strong like this. But still, I wouldn't even buy this until it got back above the 21 day. But just there really wasn't much out there to look. It was really a struggle to find some
Yeah.
stocks to talk about today.
And since I mentioned the average true range, I will bring it up. The 21-day ATR percentage here is 1.6%. So, in terms of thinking about how that ties into your risk calculation, something to be aware of. Okay,
So,
so go ahead.
on that point, just real quick, going back to the ATR, could you go back to that list and just expand it so people and sort it by ATR?
Sure.
Uh,
And this is just, things that we've brought up on IBD Live here and there that so we're going to sort it by the ATR.
yeah.
Okay.
So, and let's go up to the highest one. So the hymns, let's look at that just for a brief second. This is the type of stock you don't want to be trading when during a market correction. Or just think if the averages are underneath the 21 day, you
Mhm.
stay away from high ATR stocks because this is the type of damage that can happen, or the Oklo, or any of these App 11. This is you trade the heat, but you trade the heat in the right environment. Now,
Mhm.
if you're dying to trade, screen for things like with an under a 3 ATR and go to what had it like Walmart, we've talked about in the past, this has got a tiny ATR, but can still go down. But
Mhm.
it's just you can see those moves a lot easier with the small ATRs, and you don't get killed as much. So if you
Mm.
just have to play, go with the smallest ATR play that you can
Right.
find.
And something that's still in position and
Oh
looking
yeah,
good.
obviously,
Yeah.
yeah.
Yeah. Just a reminder for folks out there. Okay, we want to do something new today. We want to take a look at in the S&P 500 what was up the most on the day. Maybe one or two that were down the most on the day. But in terms of what was up the most on the day, you had Broadcom up 8.6% on the day. So that is a chip stock. Skyworks,
So just
SWKS, also
go,
chips. Go ahead.
going back to the Broadcom for a second, the reason why we wanted to look at that is it had numbers that everyone really seemed to like, and yet still, forget that it was up 8%. It couldn't even get above 200, couldn't get above the 21 day, is telling you how weak of an environment that you're in. And then with the Skyworks, why I like to look at what's moving up the most on the S&P, because if it's healthy, you'll see a bunch of stocks that are near their highs moving higher. When it's a weak environment,
Mhm.
kind of like we look at the XLP or the XLU or things like that as a sign for the health, you're going to see the junk,
Yep.
because this is where people are hiding. They're selling their Avago to put, or Broadcom to put it into, you know, things like this.
Yes, exactly. Such a great point about the junk. Same here, Dollar General,
Yeah.
junky, up 7.5% on Friday. Walgreens Boots Alliance, I'd imagine a similar picture here, up 7.5%. And for solar, we haven't talked about solar stocks in a very long time, so that's how you know they haven't been in uptrends. So for solar here, up 6% today. So really great point there.
And
Uh,
that's all we
sh-
have to do
okay,
on this segment for today, because there's not
yeah,
much else to get from it. So I
okay.
will attempt to share um, my trade station. Let's see. Can you see that?
Spy Weekly, we got it.
Okay, awesome. Let me bring this over. So, what's important on the weekly, we're doing the Bob Weir take a step back, looking at the weekly candles with nothing on it. So, we have three pink bars in a row. What that means is, or three pink candles in a row. That's telling you that we closed on Friday lower than where we opened on Monday. And it's very unusual to have four of those down. Four pink candles in a row on a weekly, unless you're really into trouble. So if you look back, you're not seeing it there. You see it here, and then on the August 9th week, you did close much higher than where you opened. So I'm not saying that the fourth week is an up week, but normally that's where you kind of have your washout. Over here, 3 weeks in a row, then you move up. Over here, three weeks in a row, and you move up for a little bit of time, This time you go with your fourth week and you can see that it ended up getting a little bit worse. And if you go back in time, you'll see that same type of action. We just, not going to do that right now, but that's just something to study over the weekend. And the same thing here for the Nasdaq. So as far as these candles go, it's nice that we close well off the low this week as well as last week, and that's why you see this wick, which is the bottom part, down there. But this is a nothing to write home about candle. It's not something you look at and go, "Oh, that clearly bottomed." So we're just looking for positive signs and negative signs with an open mind. We're going to switch over to our regression lines, and just a reminder, if anyone missed a couple weeks of this, and hopefully you don't ever miss, but we were putting on this regression on here starting with January 13th, and we stopped it on February 21st. Now, that wasn't long enough. We like to having 50 trading days, but that was what that contained, that trend, and then it fell out of it. So if we were to do the same thing to today, if we change the end date to today, you could see that that's your trend. And this really just doesn't capture that properly. So that's why we're not going to be looking at, and the Nasdaq looks the same. We're not going to be looking at the regression lines until we have, you know, a lot of
Yeah.
space there. Now, moving over to your 50% retracement, we've changed those around a little bit. So on SPY, we're using the high from the 19th and then using today's low. And we want to get up to the 589.43 level on SPY for anyone who's listening on Spotify or Apple.
Mhm.
So you want to get up above there. We're nowhere near that, obviously. And I did the same thing with the NASDAQ. Again, this one starting on February 18th using today's low. And for this one, you want to get to 18,939 and higher. So we're uh, problematic there. Now we're going over to the levels. So on SPY, you can see that I left all the earlier ones in here and added this one for today. So today's low, because this is the low of the rally. But you can see that we blew past
Mhm.
our final line in the sand. So that tells you
The
we're
lows
in
from earlier in January.
exactly the
Yeah.
January 13th low. I mean, that was what we had as our final line in the sand at 575.35. Blew past that like it wasn't even there. The composite was even worse. Our line in the sand was 18,831. And now we're well below that. So I put a marker at today's low, but just because we need to stay above that. But again, I left all those alone. We can switch over to the basic, the very basic of just the 21-day exponential. And you're just focusing on this one, saying, okay, does it look good or does it look bad? Allie, does it look good or does it look bad?
It looks pretty bad,
Yep,
to put
that's
it
the right
lightly.
answer. And then the same thing for the composite. So with that in mind, we will switch over. We're going to stop sharing and I'm going to share the Webby RSI stuff to see how that looks. So obviously, since the Webby RSI is the low versus the 21 day, we don't have any lines, on here right now as far as blue lines. But when our high gets underneath our 21 day, it reverts over to this burnt orange color on here. And this is my measure of, I don't want to say the word oversold or ever overbought because I don't like Bill didn't like that terminology and I don't, but it gives you a frame of reference of
Mhm.
uh, should you be looking for a mean reversion
Mm.
trade or not. And right now we're getting close to a mean reversion because our high versus our 21 day, and that's why it's showing up in this burnt orange, is now 2 ATRs away. And you can see sometimes, like on August 5th, you can get to some
Right.
extremes, which that was over, 3 ATRs. But most of the time, when it gets to extremes, it's really around this 2 to 2.5. So we're getting close to that. So that's a positive that for a mean reversion. Let's see at the NASDAQ, and that's even a little bit higher there. Looks
Mhm.
like about 2.2 or so, but you can see back in August it got well over 3. So just a sign that things might be overdone, but that's not how we trade. We just like to look at that as a piece of information to know what would be normal and natural, like a move up right now on Monday,
Yeah.
to kind of resolve that would be normal and natural, but nothing to get excited about. So here's
Mhm.
our Bob Marley charts, my daughter's favorite chart, and we're in the yellow territory right now. We would like to stay in green, and this is what yellow means is we're 4 to 8 ATRs off of our high. Green is between 0 and 4. So we're in this yellow zone. And more importantly, we're underneath these levels where it stopped before, back in December. It stopped around 4.8 or so ATRs off our high, and that's where it found support. And we've blown past that. Um, so that's a warning sign. Same thing with the Nasdaq. It's really ugly, almost getting into the red territory at this pace. It's over 6 ATRs, and we will just look at RSP just to give you a sense of the broad market. The good thing about this is it's well off of its low, so it looks quite different than the other two. That, like, just reminder, SPY is going down, whereas RSP is up above the levels that it had there. So just a kind of a different look.
Yeah. All right. Well, sum us up. What should the action plan be for the week ahead, Webby?
Okay, the action plan, what I would do is I would go back, and if you're not familiar with follow through days, I would study follow through days, get Bill's book, how to make money in stocks, any of the videos that we have on, on the website, articles, just to make sure that you understand the concept of a follow through day. So that's one thing. So again, today is day one. We have to stay above today's low for the to have a potential follow through. Follow through can happen as early as Wednesday, not any earlier. Can happen anytime after that, as long as we stay above today's low. Right now, we just need a 1% increase. In the orthodox way of looking at things, is the volume higher than the prior day. The volume does not have to be above average, just above the prior day. That was an important point the bill really liked to see. You can also look at dollar volume if you want, but really he would look at share volume being higher. So that's what you want to look for as a sign that the market might have turned. Now, about half the follow through days fail. So if we get a follow through day, the important thing is that we don't close below the low of that follow through day. That's a very, very bad sign. So that becomes a line in the sand. So let's say Wednesday is perfect. We're up 1%, or let's say we're up 2%. Wednesday's low becomes very important. You mark that as your line in the sand, and mark it as zero if it goes below that, because you don't want to go
Mhm.
below um, that level. So that's what we're looking for. I also, really, before I get comfortable in the market, I want to get back above the 21 day, and get our low above that for at least 3 days. Your other homework assignment besides the follow through days, and this is a lot easier, is just do a change date on SPY and NASDAQ, or just pick one of them, whichever one you like the best, and go back and look at every time that it came down from a high
Mhm.
down to its 200 day. How did it handle itself around there? And it'll just be eye opening. And I've been doing that. I do these homework assignments that I give out. I do them too, and I learn every single time. And I'll do that. And I know we've got to end here because you've got a
Yeah.
spot
Did
on
you
TV. I will just say that I just I believe in karma, and I believe in sending good vibes. And my parents lost their dog Izzy, which was just
Oh, I'm so sorry.
this week, and
I know how tough that is. We both know
yeah,
how tough
so
that
just
is.
send your best
Yeah.
wishes to them because
Aw,
it's a hard
sending
one.
them best
So
wishes, and give all your animals a little hug. Hug them
yep,
tight.
they're
They're
family.
special.
They're
They're
family.
family. Yeah,
Yep.
I was just gonna say, so in terms of the history and the homework, you guys did a little bit of that on Tuesday's Swing Trader video,
Yeah.
right? Yeah.
I would suggest people go back and watch that. It's free for anyone. You don't have to take Swing Trader. We would appreciate it if you do. I think it's a great product, and God knows I put a lot. The team puts a lot of time and effort into it. But at least watch those every Tuesday. They're live at an hour after the close, and Justin and I go over a ton of cool stuff in there. It's my second highlight of the week. This is my highlight of the week. and,
It's okay. That can be your highlight.
no, no, honestly,
I don't mind.
this is my highlight, of the week, and then, of course, IBD Live, which is so
Yeah.
much fun and we had a really good one today with
Yeah,
Mark, Ritchie.
we did.
That was fun.
He was great. But yeah, since you mentioned that, I uh had a conflict during a Tuesday show, but I remember that you guys were looking at some historical stuff. So yeah, go
No,
check
that
that out, everyone. It's on our YouTube channel and it's on at investors.com/videos.
yep.
Yep. All right. Well, that's it, everyone. Thank you, Webby. And thanks for tuning in, audience. We appreciate it. That is it from us for today. And we will be back on Monday morning with more on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream where we talk about market action, stocks on our radar, portfolio management tips, and so much more. So we will see you there on Monday. And then we'll see you right back here after the close on Monday as well. Have a great weekend.